Let me now turn to the external sector. With lower trade deficit, robust services export growth and strong remittances, the current account deficit is expected to have moderated in Q4 2023-24. Services exports were predominantly driven by software exports. Other business services and travel services exports were predominantly driven by software exports, other business services and travel exports. The phenomenal rise in global capability centers, that is GCCs, in India has provided a significant boost to India's software and business services exports. India, with an expected 15.2% share in world remittances in 2024, continues to be the largest recipient of remittances globally. Overall, the current account deficit for the current year, that is 2024-25, is expected to remain well within its sustainable level. On the external financing side, foreign portfolio investment, that is FPI flows, surged in 23-24 with net FPI inflows of around US dollar 41.6 billion. Since the beginning of 2024-25, however, foreign portfolio investors have turned net sellers in the domestic market with net outflows of US dollar 5 billion till June 5. In 2023, India retained its position as the most attractive destination for greenfield foreign direct investment, that is greenfield FDI in Asia and Pacific. Gross FDI remained robust in 23-24, but net FDI moderated. External commercial borrowings, that is ECBs, and non-resident deposits recorded high net inflows as compared with the previous year. The amount of ECB agreements also grew markedly during the year. Now, I have given the relevant data in the footnotes. Now, touching a new milestone, India's foreign exchange reserves reached a historical high of US dollar 651.5 billion as on 31st May. India's external sector remains resilient and the key external vulnerability indicators continue to improve. Overall, we remain confident of meeting our external financing requirements comfortably. I shall now announce certain additional measures, and there are, I think, about there are few of them. And at the end, in the concluding para, I would like to also provide some guidance for, the way forward. The first announcement relates to review of limit for bulk deposits in banks. On a review of bulk deposit limit, it is proposed to revise the definition of bulk deposits as single rupee term deposit of 3 crore, rupees 3 crore and above for scheduled commercial banks, excluding the regional rural banks, and this also is applicable, that is from, this definition of single rupee term deposit of 3 crore is applicable to both scheduled commercial banks and SFBs and not RRBs. Further, it is also proposed to define the bulk deposit limit for local area banks as single rupee term deposit of rupees 1 crore and above as applicable in the case of RRBs. The next announcement relates to rationalization of guidelines for export and import of goods and services under the Foreign Exchange Management Act, that is FEMA 1999. In view of the changing dynamics of international trade and in line with the progressive liberalization of foreign exchange regulations, it is proposed to rationalize the extant FEMA guidelines on export and import of goods and services. This will further promote ease of doing business and provide greater operational flexibility to authorized dealer banks. Draft guidelines will be issued shortly for stakeholder feedback. The next announcement relates to setting up of a digital payments intelligence platform. The Reserve Bank has taken a number of measures over the years to deepen digital payments while ensuring their safety and security. These measures have boosted consumer confidence. Growing instances of digital frauds, however, highlight the need for a system-wide approach to prevent and mitigate such frauds. It is therefore proposed to establish a digital payments intelligence platform for network-level intelligence and real-time data sharing across the digital payments ecosystem. To take this initiative forward, the Reserve Bank has constituted a committee to examine various aspects of setting up this platform. The next announcement relates to inclusion of recurring payments with auto-replenishment facility under the e-mandate framework. The adoption of e-mandates for recurring payment transactions has been increasing. It is now proposed to include payments such as replenishment of balances in FASTag, National Common Mobility Card, that is NCMC, etc., which are recurring in nature but without any fixed periodicity in the e-mandate framework. This will enable customers to automatically replenish the balances in FASTag, NCMC, etc. if the balance goes below the threshold limit set by them. This will enhance convenience in making travel and mobility-related payments. The next announcement relates to introduction of auto-replenishment of UPI Lite wallet, and it also includes inclusion under the e-mandate framework. UPI Lite was introduced in September 2022 to enable small value payments in a quick and seamless manner through an on-device wallet. To encourage wider adoption of UPI Lite, it is now proposed to bring it under the e-mandate framework by introducing a facility for customers to automatically replenish their UPI Lite wallets if the balance goes below the threshold limit set by them. There could be some, I think if you want better clarity, this statement will be uploaded immediately after my, my address, my statement is over in the next couple of minutes. So please have a look at the uploaded version. That will give you clarity. We try to avoid long sentences, but sometimes it becomes difficult and unavoidable. So please bear with me. Now this measure will further enhance the ease of making small value digital payments. And the final announcement relates to Harbinger 2024, Innovation for Transformation. The Reserve Bank has taken several pioneering initiatives in recent years to encourage innovation in the fintech sector. One such key initiative is the global hackathon, that is Harbinger Innovation for Transformation.